Hello and welcome to another daily report video. My name is Alistair Schultz and I'm going to be a host through today's trading journey. Now, interestingly enough, I've also been paying quite close attention to what Fed Chair Powell said last week on Thursday. And I've been watching the charts to see really where that response has actually come from and where it's going to be on implications for the future. Now, last week's speech, they decided not to actually push against the bond yields that seem to be continually rising. And of course, the metric on everyone's tongue is, well, what about inflation again? So at this stage, what seems to be the case is we've got a dovish Fed chairman. We've known he's been dovish for quite some time, but we weren't anticipating him to be so this time. We were hoping to see more support or more challenges, or at least perhaps more purchases of bonds to try and help stabilize those yield prices. But the narrative from the Fed is that they are still quite happy with the idea of where pricing is actually going, and that it estimates that optimism is growing with that rise of inflation. Whether that's true or not, maybe he doesn't have his boots on the ground, but I know there are certainly plenty of analysts and investors and traders who are all a little bit worried about inflation at the moment. Now, looking a little bit further forward to that, why are we seeing some other changes? Gold has been hit hard by this sort of news because it signifies that we can actually get a return from somewhere else. And the same sort of thing, if we look at the ETF outflows for gold, the last 2 weeks have been some of the largest that we've ever seen in the last decade. So, looking at the gold chart, as treasuries rise, we're going to continue to see gold fall, at least for the time being. Usually we would have this ideology of gold being a hedge for inflation, but that's not exactly true, and I don't feel that it's ever been really the case. Now, moving forward from this side of things, what happens on the inverse side as well? On the flip side of this, the US dollar is rising. The greenback is nearly up 2% in 2021. And most of us were forecasting that at some stage this year, we're probably going to be seeing lower US dollar pricing over the term of the next couple of months, at least. The reason behind it, more stimulus is on the way. Theoretically, or at least from economic theory, that suggests that the value of the dollar should fall. Now, at the beginning of this year, the short position was the most popular trade going forward into 2021 on the US dollar. But for now, that seems to have changed the narrative, and we'll have to keep a close eye on what happens next. Now, if you do have any questions from today's video, then please feel free to get in contact with me via any of my social medias that you can see above and behind me. Don't forget to like and subscribe to this video and double check your economic calendars so that you can make sure you're all aware of what the news is for today's trading. Otherwise, have a great trading day ahead.